Okay, what was that?
Do you look at other data besides like just technical analysis? Like, do you look at inflows, outflows, how much hedge funds are buying into a specific stock?
I don't really
Um,
look I don't really look into like the insider trading part. I do read the data sometimes, like the inflow and the outflow.
mm,
I look at unusual trading activities and stuff like that. Whenever like a contract comes in with like super high open interest or volume or something like that, I do use those. But for the most part, I mostly just trade technical analysis because that's just where most of my success is. I can trade better if I see where um where my tops and bottoms are. And then if I see like a bunch of flow come in for, let's say, GameStop. So let's say an unusual amount of call flow comes in for GME. Then what I'll do is I'll probably go and look at my charts or I'll chart it out myself. And then it'll go from there and I'll see if they can line up with with what I pretty much seen as far as the call flow or the options flow. What do I use to find the flow of contracts? I use Trading Ticks and I use Quant Data. Shout out to my boy ABJ at Quant Data. Um, if you need to know anything about that, he's the man for you. Super helpful dude. But those are the two apps that I use to find the unusual call or put flow and just look at where the money's going as far as that. So some people use it if they see a lot of call flow on a certain app before earnings. They kind of can use that to predict which way the earnings will go. But even when I predict which way the earnings probably can go, I go off the charts. If I see the stock getting heavily pushed right before earnings, then I'm expecting it to come down because they bought before the earnings. Where they already priced it in. And then if I see like a stock is getting heavily beat up um, right before earnings, then I know they're dragging the price down because they're expecting a good report and they just loading up at the bottom. Kind of like we seen with Amazon and Tesla and stuff that made major gap ups. You probably seen those beat up the day or two before the actual earnings date, and then you seen the price skyrocket. So I use technical analysis for everything, and then I just kind of use flow as pretty much as like a crutch, like just something extra to help me make a decision. So going back to Nvidia, what I'll be watching for are these two levels. As you see, I kind of drawn out the support and resistance levels or the levels of consolidation. And we can see movement in here before the final drop down. If we make the drop down, then I'm watching for this 141 level, 140.50. And then I'll look to see if this gets filled. If we break below this trend line right here, that's a break of structure. So what that means is once we get a counter that closes below this trend line, this trend is irrelevant now, like it's been breached. So now that once you've extended below that trend line, now you just waiting for the next bottom to form. So this is an early trend that I found earlier today. And like I said, we just watched the price action. If this gets breached, then I'm um I'm pretty much looking for the break of structure and I'm looking for lower level, even if it's just to fill this 137 gap. If we want to open high and we break above this level right here, then we can see this 149 level get tested. And if it holds, then we're looking at 151 and 152, which would be kind of around today's highs. And if we break those out, then I think that we'll form some support. So if we break out let's say we move to the upside, we go hit here, and we come back down and retest it, and then we finally break out. Nvidia look like eventually, if we go into that market, we're looking at 162 right now. And that's if it makes support above 150 and it gets some rising support here going through from 151 to 152. We're looking at the 162, 163 levels next. And that's gonna be a nice move for any NVIDIA holders. Like I said, you buying shares, that's a beautiful move. Especially if you got down here and you load it back up, that's a nice move. And that's where NVIDIA could potentially hold if the market decides that it wants to go back and start retesting levels, all-time highs and stuff like that. It's NVIDIA, so it's possible. But if we don't and we come back down, these sellers get us, then we can see a move back down here. Let's say you just make that beeline down there to 141. Eventually we'll sell that. We gonna say that if it breaks below this trend line here, then we can expect for this to get ready to get filled. And it's that one down here, 119, 120, but we we don't know when that's gonna get filled, when the market gets ready to go. So this is almost look like an inverse head and shoulders if it does come down. Well, not an inverse head and shoulders. It might be a cup and it forms down here and comes back up. So my mental notes for tomorrow is support at 137 and then resistance at 152. Those are like my max levels for here. Let's look at MSTR. It's been a crazy ride for y'all, man. I know it has been. I didn't see a lot of people make money off of this. People was getting rich overnight. But MSTR, I guess it was some selling of notes or something like that. I kind of keep up with the news, but I don't. I'm not really a news-based trader, just like I'm not really a flow-based trader. Like this is all I pay attention to. I really don't have time to watch the charts pretty frequently. So, once I get mental notes in my head from my charts, and this is why I draw out these white boxes, because every time I see them, I know once the prices get in these white boxes, it's time to either take calls or puts. Appreciate that, Noah. 2.8 billion in convertible notes. And I guess that's to buy more Bitcoin with that. So dude's a mastermind. He he is Bitcoin. So today we seen a high of 542. So I know a lot of people was holding the 500 contracts and buying shares. These prices are crazy. The way that they move is wild. I I have seen something like it. SMCI was that type of monster before it went to $18. But if you've been in the market for a while, do you remember when SMCI was running like $100 a day? It was crazy. But the good thing about this chart right now that I see is there's no red gap downs. Normally, when you see the red gap down, those are going to be your sellers. Everything that I see right now are all green gap ups, and they're slowly being filled. Even down here, they're slowly getting filled. Now you do have one down here around 271. I was talking about this to one of my Discord members, and will it get filled? Possibly. It's possible. When we don't have a clue. We just have to see what they're gonna do and how fast it's gonna sell out. I mean, I think it just sold off $95 in probably an hour. Let's see. This was at 10:35, 10:40. It was sitting at 475. At 1:45, it was sitting at 435. And then by close, it came as far as 381. Large call flow for 255 tomorrow. Hey, 255. That means you feel in the 271 gap, and then you got this gap down here at 216. Now, I don't know when that's gonna feel. And I guess we talked about this because I got a box down here. We talked about this back in the beginning of November, and the price was 267. Yeah, the price was 267. That's crazy. Look at all these gaps. It gets filled and then it just booms. So I mean, I don't know what the dude doing, but he's doing something right. So this is our structure trend right here. This is the structure trend. Down here at this 366, 365 levels. This is where I would expect the grab calls right here. Normally, how I like to play is I like to grab calls probably at a support level before my very last support level, before it breaks structure. So if you grab calls here, then you're gonna be good for at least probably this 440.
There's always gonna be wait.
I'm waiting for the funny part. Where's the funny part?
I find it hilarious.
All right. So you can see prices retest this 441, 442 level. As long as the structure stays intact. Like I said, no gap down. So that's the good thing. As long as you don't see like red gaps forming, then that means it's still bullish. Once you start seeing these green blocks turn red, that's when you got to start worrying because all of these are healthy dips. You know, these are just panic sells here and here. And this is why this is my edge. I don't really pay attention to the news. So when I just see something happening, I really don't know why it's happening, but I know what the chart is showing me. So I know as long as I don't see any red gaps in my charts, I know this is just panic selling for the dips to get bought and to go back to the upside. So we could very much see this thing right back at these two 542 levels, especially with the volatility this thing's capable of. Simple. Simple. So it's healthy. Even if it continues dipping, and by no means am I just, MSTR by it. But you have these big gaps here. And if you're new to my charting, I use the Fibonacci, well, it's called the Gann fan, but it's forms of Fibonacci. And it showed me my support and resistance level. I know in between here, it gets choppy. I know here is a big move down, bigger move down. So normally you want to grab entries. You want to grab entries, and I always use the 5-minute charts for my entries. But normally you want to grab anywhere in here where you see the ranges are small, from 362 to 380, even though that's big number in options. But you want to be able to grab when these support levels are getting tighter. Because you will see it blast through, but you will see it run right back up. Because it wasn't much of a struggle to fall, it was just a free fall. So when you see that move back up, guess what? You might see a cup form here and then a straight vertical move back up. And all you do is you just pay attention to what's been consolidating, the areas that's been holding up for an extended period of time, and boom, that's gonna give you your levels that you should look forward to. In one of my old YouTube videos, I said this is how you find strike prices. You find these areas of consolidation, and you know, all right, eventually the prices are gonna come back in here and consolidate again. So why not take a 471 strike, or why not take a 497, 498 strike price? If you can spend the money and take a 470 strike, guess what? When it hits 470, you can trim some and you can hold any money contracts all the way up to 497. And that's some extra money in your pocket after you done close contracts. You done held a run or two and you done made some extra money and got that delta pump. So one thing I did notice about this, the daily candle. Let me see, I make my daily candle look normal without all the drama. That's what I hate. All right, so let me do this. I'm gonna take off how you hide. Okay, I'm gonna hide everything, and I'm gonna just show you straight, no indicators, no nothing, just straight candlestick structure. And this is what I tell people: if you're gonna learn how to trade, if you want to learn how to chart, take everything off. I don't use RSI. I kind of use MACD, Bollinger Bands. I use them like Fibonacci. I use everything when I need it. It's kind of like having that extra little, piece in your arsenal just to give you more confirmation. This is all I pay attention to, and when I teach people how to chart, how to trade, I tell them learn how to read straight candlestick structure, and these are actually bar charts. And the difference between the regular candlesticks and bar charts, you don't have the traditional look of, candlesticks. It's just a line and you see opening and closing prices. And those prices are important to me because that tells me those are prices that have been agreed upon. It was known that up here at 536, it was too much to handle and the price sold off. Once I see, all right, this is where it closed at, that day, it lets me know they had enough selling for the day. They had enough selling. Let's see. And look where it stops at. It stops on the opening and closing price between two bullish candles. So they agreed to close at that price and they agreed to open at that price. And both times that it opened at those prices, it's been a bullish day. So what we just saw right here today, we seen a big bearish candle. And it pretty much took out 2 days worth of gains here and here. And it almost cut into a third day. So this is the psychology behind technical analysis. You start seeing pretty much, all right, you see a big bearish candle and it blows through this day, blows through that day. All right. Both of these days were bullish. So maybe the stock was having a bad day. You're looking at these last 4 candles right here to eventually buyers to step in eventually and push the prices back up. As you can see, you had a bearish engulfing candle that day, kind of had a consolidated day because you had bulls, you had buyers in both of those days. So they eventually held up at that 50% mark of this candle right here. That's 50% of that 1 day's gain. I can't add the line, but this is 50% of this candle's gains. before the buyers finally stepped in and pushed the prices back up. So what we're going to look for, if you're trading MSTR, you're going to look for this. You're looking for a consolidated movement here. So you're looking for that movement in here, down here, and you want to see that hold. Now, what happens is, if we do get that hold right here, you want to start watching every day, whether that candle's closing bearish or bullish. If you start seeing more yellow candles in this area going to the side, or even coming up, rejecting up here, coming back down, opening high, closing low, you want to see how these daily candles hold. And that starts to tell you a story. Even before the news even comes out, you start noticing, all right, something ain't right. Why aren't they buying this and pushing the price back up? So this is why I tell people, normally when I trade something, I beat the news because I'm not paying attention to that or waiting for them to say something. I'm just trading what I see. When the market tells me to buy, I buy. When they tell me to sell, I sell. So once you start seeing yellow candles form, if they do, not saying that they will, not saying that they won't, but if you start seeing yellow candles form, but it's still consolidating sideways, that lets you know it's getting weak. And eventually it's going to break this structure below this 315 area. And then that could lead to us coming down to fill this gap down to that 479, 481, 480 level right here. And that still gives an opportunity for bulls to step in because it's bullish. It's a bullish gap up. Institutions are they waiting on those levels to get bought up. So it's so volatile, you just don't know how much the panic dip is going to drop the prices. All you can do, like, you can't afford the options, buy the shares, snatch them up for a long time. You don't see nothing but green gap up. So that lets you know, like I said, this dude, Michael Saylor, he know what he's doing. He pushing stock prices up faster than Elon Musk do Tesla. So we just gonna watch. This was a bearish day, definitely a bearish engulfing here to here. Took out 2 days worth of gains. I'll be watching if we open lower tomorrow or it decides to push down. We'll be watching consolidation between 365.50 and 317.54. If it breaks below this 317.54 level, you'll expect for a sell eventually, break a structure to fill this down to 280. Man, I know in the money, just to go weekly, option contract price is about to be through the roof. Yes, it's like I know it's at least about 800-900, maybe $1,000, just probably for a 0 day or 1 day contract. But if you can afford it, I said, you can afford a contract when you can afford a good contract that has good Greeks. When I say afford a contract, I don't mean you just got the money to go buy a weekly contract at $1,300 now. Do you have enough money to go and buy options on that contract 6 months out, 3 months out? Can you hold a contract through a whole quarter with the possibility of it going into money? That lets you know what network your portfolio is in. If you can go and buy an NVIDIA card for 6 months out or 3 months out, and it has possibilities of going in the money, then it's within your range. You got a minute. Greeks, all right. But if you have like an account and let's say your account is like $5,000 or below, you can afford stocks under $100 to hold on. Because March contracts, April contracts, to get them in the money or close to be in the money, strike price is like $500. And that's with it's probably like a $40 or $50 delta and like a $1 or $2 theta. with an IV under 30%, 20%. So when I'm talking about Greeks, when I look for good options, good options contracts, what I'm pretty much looking for is I'm watching the delta and I watch the theta. They got other ones, gamma, rho, vega. Those are the two I'm watching, delta and theta. What the delta tells me is how much I'm going to get paid for each one of those dollar moves. So if you go to an options contract and you look at, let me see if I have one already. I was trying to see if I got a screenshot of one with the Greeks. No, I don't. Okay, so normally you will look at the delta on it, and let's say you buy a stock that's like $50, and you go and you find a 6 month out, or let's say a March contract. You're gonna look for it in the money, maybe with $500, you're gonna find a delta that's probably gonna be like over $40. So that means each time for every dollar that stock moves up, you're gonna get paid $40. Then you have the theta. The theta tells you how much you're gonna lose every day that you swing. So when you're swinging the contract, let's go to Nvidia. You think you got the money to trade Nvidia, and you buy something too far out the money, and the theta is higher than the delta. So what ended up happening is the trade has to go in your favor when you buy that, because now you're gonna face theta decay if it doesn't. If it breaks down, say you buy a call for 150 and you buy it at 147, and let's say you got a 153 strike price. Well, instead of 150, you have a 153 strike price. Well, I just showed you guys on the chart that 152 is like, that's our stretch right now. We looking to retest those highs. So 153 is kind of out there. It has to be in a strike price that's attainable. So let's say 150. You want to buy an Nvidia 150 March call. That's gonna be a couple dollars out the money, but it might have a $20 delta, and it might have a $2 or $3 theta. So that means even if the trade goes against you, you'll be able to hold that contract for enough till March in hopes that it goes back in your favor, and you're not going to lose money every day just for holding it. You're not going to be taxed crazy just for holding those contracts. So if you buy something, let's say you buy, and it's only a week out, let's say the delta is like $15 and the theta is like $30. Well, off the rip, if that trade goes against you, you're going to lose more money than you can make. Because now that contract has to work just as harder for you to make up money. You don't want to buy a 550, 545 contract next week, because you don't know how long it's going to consolidate in between this big bearish candle. Yeah, we would like to say Bitcoin gonna go right back up. It'll push, and it very, very well possibly will. It very well possibly will. I was gonna look at
Nah, I
Bitcoin.
feel you though. So you basically just making sure the delta to theta ratio, like that delta is a good bit more than the theta, and that's all.
Right,
Good
right,
number.
right. Because if you don't, it'd be like you chasing something that you never gonna reach as far as profit wise.
That explains probably when I first started how it's like I like the stock would be up from when I bought in, but I be down in mark points. Probably I had a bad theta.
Right, right. So, and that's what happens. Like you wonder, all right, I bought a stock at 165. I bought Amazon at 165 or whatever the price it is. I bought Amazon at 198. It flushed down to 196. I held it for a day. It came back up to 198. How much money did you just lose overnight due to theta? And now you wondering, man, I'm back at 198, but I'm still in the hole. What happened? Well, you got decayed a little bit, and that delta's not making up for it. Normally, if you just have to want to buy something out the money and you want to find a balanced range, try to get the same delta in theta or maybe a couple of dollars under the delta. So if you got one that's like $26 for the delta and 24 or 25 for theta, at least that gives you an opportunity for that. You know, you might lose a little bit, but at the same time, it'll kind of help you break even a whole lot faster. And then once that price gets over a certain number, then you will get that delta increase to where it starts picking up and you start getting that little bonus money. So definitely, if you're in the Discord, I took a lily swing. And what happened was I didn't check the open interest and the volume like I should have. And so I ended up getting a stupid feel. So I bought down here. So delta should be higher than that theta. Definitely. Definitely, because you want to make money. You want to make money and you want to not lose more money just for swinging. That's what's happening when you have a higher theta. Then you're pretty much you taking that risk that all right, it's gonna go there in the next hour or two. It's gonna go into money.
Do you want to touch on the positives of buying a contract that's already in the money?
As far as buying in the money, you get a better return. So let's say once that strike price goes in the money. So let's say you bought this Eli Lilly contract's a 736 call. Once it starts going in the money, then now you're gonna start getting a delta increase, and that theta is gonna start dropping too. So with that delta, let's say when you first entered it, it was like $30, $35. Once it starts increasing and it goes in the money, then it's gonna go. Instead of you getting $35 on the dollar, you'll start getting 45 and 55. And that's when you start seeing that money start multiplying as the percentage goes up until it gets to like 99 and you just receiving the max delta for each dollar it moves up. So that's why going like as close as you can in the money is a good thing, because once it goes, then that's when your money starts racking up even faster, because you're gonna start getting that delta max out, and you're gonna be receiving like $100 for every dollar it moves. So
Yeah, royalty for clarity. I've been trading options since about 2017.
right,
And one of the mistakes that I made when I first started was I just want to hit home runs, so I'm going to go $10 out of the money. When in
facts,
reality, it would have been smarter to just grab one contract at the money or in the money and avoid theta decay, because your theta drops drastically and your delta almost is immediately at 100 once you get into the money. So for anybody who is new, I would just recommend, hey, it's fun to hit home runs. It's more fun to make consistent gains. Um, so target those option contracts that are close to the money or in the money.
facts, facts. And that's one thing I preach in the Discord is you got to find where your portfolio can handle so you can take in the money calls. Everybody, like you just said, everybody wants to take those home run plays and 1,000%, 500%. Those are good, but you have to find your guarantee. I'm not gonna say guarantee. You have to find your good support and resistance levels. So just like down here, if you enter at 713, which we did on the first Eli Lilly contract, we swung it and we ended up closing, I think like 22% or something. But shoot, $1 because of MSTR. God damn. The highest that I'm gonna want to take is, man, hey, look, I'm sorry, bro. Hey, that's the type of monster MSTR is. But the highest that I want to take is a 736, maybe a 737 strike price. Anywhere in between, I'm not worried about it. I'm going straight support level to resistance, support level to resistance. So if I'm gonna go further out the money, then I'll go to a 756 contract and look for that'll be my next strike price. So you always playing from support to resistance, support to resistance. And if you can afford to go in the money, if you can buy this 737 contract, cool. You can buy two of them. Once one get here, take profit. You can wait for the break above, and you can take a retest on a 756 contract. You didn't held one contract. You got rid of one. You held the second one through, made money, sold the second one here. Now you got the money from the first options contract and you got the money from the second options contract. You waiting on the dip. Here's your retest. You buy your contracts there. You hold another one. You looking for the 755 strike price. As long as you can stay in the money, then you're going to continue to make money. That's the trick of options trading. Be able to buy in the money, and you will have a that's where you start seeing people grow their accounts because they're taking in the money or attainable strike prices. What do you mean by at the money or in the money? Just that. So if you're buying here and you're looking for a strike price on your contract, you want to see it hit 736. So you're taking it, it's out the money here. 736, 737 is out the money when you're taking a 713. That's just your strike price up here. You're buying at 713 with the strike price of 737 because that's where you want it to go. And once it breaks above this 736, now you're holding in the money because it hit your price target and now it's trading up above those levels too. So that's pretty much out the money, in the money terminology. And you want to try to be able to buy in the money contracts. Let's see.
How much, what percent of your portfolio would you say you putting on them contracts? Cause it's like right now, I'm just starting. So it's like I gotta kind of probably like 70% of full port or 60% or sometimes like 80% just to get those realistic, you know what I'm saying, contracts. I gotta like put all 300 or 400 of my portfolio depending on where I'm at.
All right,
So
so
like,
I'm gonna give you some realistic advice. It's two ways. The hustling way, the way that I learned and I used to do, I also used to blow my accounts, but I was chasing money and I was new to it. I'm taking, I'm using my whole account every day. And that's not smart, but that's what made me I had to get better because the way that I was learning how to trade, it was risky, but I was making money. Now, I also was trading Tesla when it was like $2,000 with a small account. I was trading Nvidia at high prices. Like stocks are good companies are a whole lot cheaper than they are when I first started to. But if you want to play it the safe way, I gave you the risky way. You just gotta do what you gotta do and make sure that your entries and exits are on point. If you gotta use 80%, you make sure that you know, hey, it's probably an 80% chance this stock gonna move this way. Like your due diligence or your source, it needs to be credible if you're using most of your portfolio. Now, the safe way, buy some shares, ride it, day trade shares, and grow your account a little bit more like that, or scale down on your stock prices. Go under $100. I've been scanning for stocks under $100 to trade with my people. Cores, if I look at it, let me see if I can pull it up. But you have to pretty much You have to come down on your prices. I'm trying to see what some of these stocks that I have been looking for. And I know people are trying to, you know, find good companies that got decent prices. So TEM, I don't know. Well, I think it's like a medically AI company or something like that, but it has a lot of growth. Let's look at the 30-minute. This is a cheap stock, under $100. And
Yeah.
okay, this is a cheap stock under $100. And I'm reading these messages real quick. Rolling positions. I don't like rolling positions only because you're not getting the money back. You just cutting ties with what you lost and then using new money to try it again. How do you learn chart and technical analysis? It's something to take years to learn. I've been in the game since pre-COVID, and I only got better. But I learned this to make money, like to make money. So I didn't really have a mentor. I didn't know that the stock market even existed before pre-COVID. It was just I just stumbled up on something to make some extra money, and it just made sense. So I read a lot of books, a lot of screen time. Yeah, it takes a while. You have to get used to market cycles, market psychology. You have to get in check, get your emotions in check. It's a lot that comes to trading that, people don't really talk about. Um, all right. So recommendation on books. I will post it. Are you on after hours? Warrior. Warrior. Okay. But if you're on after hours, I'll repost my little list of books. I haven't read any new ones lately, which I probably should, but I did post one of my posts was a list of books that I did read. All right. Hey, Drew, appreciate you for stopping through. Cloud Trader, got you. All right. So back to TEM. It's a stock that's under $100, has fairly good growth. I did see the head and shoulders up here. Like I said, you play levels to levels. So if you're up here, I'll take a strike price, I'll put at $56. Now, why am I doing that? Because I'm looking for that target to hit and I'm trying to get the best bang for my buck. I'm gonna spend a little less money. Like you said, if you trying to grow your portfolio, you take a strike price that's far off the money, but you see that's your next level of support. And even if I didn't have this up here, I like to hide this. Even if I didn't have this up here, you can check the 30-minute and there go your level of support right there. This is probably just the overreaction because we've seen it retest these highs. Well, we've seen it retest these levels. It gapped up and now it's an overreaction down here. So what that tells me, an overreaction after a nice size gap up. It's probably gonna go back up.
Just inbounds. If you got it, they did. They're gonna give it to.
But yeah, it's probably gonna go back up. And you're just gonna pretty much on the 30-minute kind of shows you what you need to see, but you just start looking for next consolidated level.
You really be putting me on though. You can pull up Starbucks real quick because speaking of like just like everything you said, stocks that's under 100 that been like bouncing, respecting the ranges and supports and resistance. Starbucks for the past probably couple weeks, it's been respecting like 96, 97 support to like 100 resistance, and it's been bouncing ping pong, and I've been taking trades, but I'm scared it's gonna break. I don't know.
On Starbucks,
Yeah,
Starbucks one of the ones. It is volatile, but it do consolidate for a long time before it
that
makes
jump been
moves.
bouncing for a minute.
So just straight off top, like you can see this is on a 30-minute. You can see the amount of consolidation. And it's kind of an angle consolidation. So right now, if I was trading it, I would respect the channel. I would actually go like this. And even though one is broken, that's probably the clearest channel that I have.
So it will probably break soon because it's on that rising support.
Yeah. So like I said, right now, this would just be what you'll respect. So we've seen the bounce here. You kind of seen a dramatic, oversell. You respect it, respect it, respect it. So just inside this little, this little wedge or this channel forming, you have a gap up right here. So that level could be retested. You could see a little overreaction panic sell. This is the trend that I just drew. This is my trend that's already here. So what I would look for is calls right here until this is broken. And I'll look for support down to the 95, 96 level. Well, by the time you get there, it'll probably be like 96. But I would look for a bounce here. Somewhere in that range. And then if you get a break, you can look at it kind of like that this stock will kind of panic sell. So you can watch it break below here and then kind of bounce at this 96, 97 level and come back up. And it can come back in this trend, or you might just have to probably widen out the trend. So let's say if it bounced like down here somewhere, then you might just have to probably you'll probably see something like that. So it'll just widen the channel for another move back up. Just because I mean it's been moving. Even if we look at a bigger picture on the 1 hour, you can take some of these trend lines off and then you can just find a better one. Notice once you go on higher time frames, those levels are more respected. So this is a 1 hour. It's going to be more respected if I'm trading off the 5-minute. If I go to the 4 hour or the 2 hour or the daily and I find a trend on there, it's going to be more likely that it's going to be respected. Weekly, monthly, the bigger the trend is going to be, or the bigger time frame you find the trend on, the more respected that it's going to be as far as the price action goes. So that'll be like another one too. If the trends are stick. But yeah. So this is pretty much you going off a bigger time frame. One of my other videos, top-down analysis. You start from bigger time frames, you work your way down to smaller moves, and then you just go to the 5-minute and you just trade based off of those trends. How do you determine levels of support in the moment? What moves are you looking for to tomorrow? I really don't how do you determine level of support? I never trade off the moment. Now, if I'm looking at this chart right here, this is something that I drew today. If I open this up tomorrow, I already got a blueprint of how I'm going to trade it. I'm gonna look for resistance up here, and I'm gonna look for support right here. It's how you can tell if it respects it. It's to tell you, all right, the price action drying up. If you had Bollinger Bands, you'll probably see the band start squeezing. If you had an RSI, you'll probably see it start hovering around the 50 in here. It'll start hovering around the 50. If you had a MACD, you'll probably see if laying flat. Like all of these extra lagging indicators going to tell you the price action is drying up. And I can notice that just by looking at this pattern, that all of those are going to start squeezing up into here until it finally breaks to the downside or to the upside. So, so how can I move it from people just hate it? How do you turn the support and resistance? All right. One other thing that I was watching, somebody said Apple. All right, so Apple's kind of in the early uptrend. Gap here, gap there. So we got this rising resistance right here. Well, we actually got two. There we go. Sometimes you see hidden support that you don't see on the hourly. You'll see it on the 5-minute. Like I said, I always make my entries and exits off the 5-minute charts. I get to see support here with a overreaction, push back up into supply here. It pushed up, gap down. Like these gaps, these candle structures, it tell you a story. And all you got to do is know how to chart it, know how to read the price action. We haven't seen no real gap ups in price action. All we see is a slow consolidated move to squeeze out bulls. Well, to squeeze out bears, because I was short here. And what happens, we short here, we think we getting that move down here, but it comes back up and trades above it. Same thing here. It gaps down, good for puts there. Now you're seeing it trade squeezing out the bull or squeezing out the bears that bought in here is trying to squeeze you out, hunting for your stop loss. We still in this area right here. And it's slowly going back. So once you get in these zones where sellers always kicks in, you can expect a break below this 227. You could take 226 puts and you can play it to the downside. You get that panic reaction. But look where it's been bouncing. You think you're getting that move down here, but you don't. It instead of it actually breaking down, it uses this as support at this level. And it bounces back up. You got a little triple top action right there, and it comes back down. They can do it again. So right now, I'm not seeing any positive gap ups until we get down here. And that's between 223 and 224. And that lines up right over here. So you see how I use the candlestick, the gaps, I use that in confluence with my charts and my support and resistance areas. So if I'm bearish, if you're just looking for something just out the money, then you can play 225. And if you just have to get that oversell, that panic sell, and it goes in the money down to 223, there you go. You just got one in the money, but you need to know that once it breaks below 225, you need to be ready to sell because at any time it can bounce and go back to the upside and get you out them contracts. So it's all I'm doing. This is all I'm watching for. I'm watching for seller zones. I'm watching for buyer zones. when I'm making my watch list and I'm looking for calls, I'm looking for stocks that's gonna move. I'm not looking for anything that has this in the way. If I go and look at Amazon, no, Google, because we traded Google. We actually beat the market. We made calls here on this gap up. And we took profit up here in the supply zone. It actually traded up and it squeezed out bears up here. And I was looking for a push up here to 151. Prices got exhausted. It gapped down. After it didn't even feel it. It just gapped down and sold off. It found support here and then it gapped down again. Why? It's getting exhausted at these levels. And it sold off below. It filled the gap down here. It filled that gap and then it's panic sold. So if you bought here, once it filled this gap right here at this support level at 169, you got burned because it dropped all the way down to 164. But this is why you want to take out long contracts. Because even if you bought right here, then you holding through the dip. You haven't seen no more of these gap downs. You haven't seen no more of these gap downs. So if you bought here, you're just gonna have to average down and buy again and wait for it to retest as long as you don't see something like this form. You recognize exhaustion because you have to look and see how hard the price have to work. So you find a resistance level, and if let's just say if you're looking at something that's in its all-time highs, then you have to wait on the first dip. So let's just say this is a daily chart. You would trade here and you would look for the first time it pulls back. And this is on the 5 minute. You're looking for the first day of pullback. That's pullback one. Then you come over here, you see another one, and then you see another one. The bigger move is the bigger consolidated move. And you're looking for the breakouts. And honestly, I'm just watching this because this is the first time it made highs, and it's the first time that it just kind of made lows. It bounced from this level, it bounced again here. So now I'm watching the highs again. If I see it reject above these highs again, now I'm watching to see where the support phone's up. All right, fam, appreciate you for tapping in, man. But once you see this third one, then you're gonna try it again. You always gonna short around these levels. Sometimes you might get stop loss might hit. This is where you see me call puts. And I tell you set the stop loss just in case it decides it wants to go up here, but you're always gonna take another put around this previous day's highs. And if you just see it keeps in this area too long, eventually they're gonna sell it off and they're gonna want to find out where the buyers are. These gaps show you that here and here. You got small amount of sellers here, but that's been over gapped by this one. So it lets you know the buyers are strong in this area compared to the sellers here. So if you bought here at this level, 69, you just waiting for the dip and then you waiting for the move back up to retest. Good Greeks, the delta comes back, the theta stays in check, and you make your money back. You don't get back here and then you still down $20. You get back here and you only down $0 or $2 tomorrow. But that's where the contracts come into play at. So I think we looked at enough tonight. I'm gonna go ahead and wrap it up. Call it a day. Appreciate everybody for tapping in. If you new to the YouTube, please like the video and subscribe when I post it. You can go back through here in the upcoming days and check my charts, or you can always just find a way to hit me up. Like I said, the Discord is popping. We making money. Every day we try to close out at least about $100 a day. because I want the small accounts to grow. I want to hear people eat. I want to see some testimonies. So today was just kind of a hard day to trade, but better days will come. You just have to be on the right side. But like I said, stay in contact with me. After hours, Discord, Patreon, YouTube, however you need to get to me, Instagram, Twitter, I got them all. Royalty Traders. So I'm always down to help. I know how it feels to be in a learning space. I was there a long time ago, so I always tell people my job is to help you shorten that time and be able to grow as a trader in a shorter amount of time. So be check with all y'all in the morning. And hopefully we get some money. Yeah, everybody good? Charles, appreciate you for tapping in, fam. Appreciate you, Brandon. Appreciate you, Ragu. If I'm saying that right. Brandon Matthews, appreciate it. Noah, appreciate you, man. Chali, hey, always good tapping in with you, man. Y'all catch up with me. I'm gonna call it a night. See y'all in the morning.